Hey everybody. I guess I should start out by apologizing. I'm sorry. Despite having a gold colored monster on the screen yesterday, I actually drank a red monster, and well, I had a red day in my account. I don't know about you. I guess I can't fool the market. It was the first time I drank a red one in like, I don't know, 4 weeks. And I don't know. call it call it what you will. Fate, I don't know. That was just weird. Weird. Um Crypto miners definitely pulled back. All the crypto kind of proxies, MSTR, Coinbase, all those crypto related pull back. And yeah, despite me putting a gold one, I thought maybe it's just putting it on the screen. Nope, it's me drinking it. And imagine that. I don't know what to say. I apologize. Maybe I should never buy a red one again. I guess I don't know. And drink them on the weekend. Yeah. Um, Yeah, just crazy that I drink a red monster, we get a down day. Just, I don't know. I apologize, everybody. I apologize. Not a red one today though. So, hey, good morning, channel members Arturo, channel member Rex, channel member Sergio, channel member Rob, Ed, Dayton, Rollin, Rongamer, Swinborn, Amy, Darren, Don, Cliff. Good morning, everybody. And if you want to chat with me, say hey, good morning, like all these fine people tuning in here. Click the button over here in the corner. Be a subscriber on the channel, and you can chat with us like Ringo, Craig, David, Infinity, Laura, Douglas, Gary, Tara, Alan, TB, Craig, John. Good to see everybody, and welcome to the stream. Ringo, don't recognize your name, but welcome to the stream. And let's just start over here. As always, all trading involves a substantial risk of loss. If you're not good at it, don't do it. If you're just starting out, paper trade. Past performance not necessarily indicative of future results. That means just because I predict it, and I've had a history of getting lucky in the past, I may never get another one right again. This presentation intended to be informational, educational, fun, entertaining. Hopefully you're entertained. If not, you got plenty of other things you can go do. It is not a recommendation to be buying or selling any financial instrument. So basically, don't trade stocks, options, bonds, forex, futures, cryptos, treasuries. Don't long them, don't short them, don't trade them. All right, there's a significant risk of loss. And if you desire personal financial advice, you gotta go hire a financial advisor, and that's somebody you trust. Not just don't just hire the guy down the street. Make sure you trust them, because if you're not gonna take a vested interest in your own money, well, why should you trust somebody else to? I mean, they're just gonna make some of your money into some of their money, and they don't really care. They don't really care. The only person that cares about you is you. Number one. Watch out for number one. All right. You may feel like somebody that you hire will take care of your money, but I guarantee you, they are not going to care nearly as much about your money as you do. And if you don't care about your money, they're certainly not going to care about your money. They're going to care about making your money into their money for as long as they possibly can. So they'll prolong your money, but they're going to be focused on making your money into their money. It's just the way people are. I mean, it's the way the world works, right? If we didn't do that, none of us would have a job. Nobody would make any money. So PPI out this morning, in line. Everything's in line. CPI yesterday, in line. Unemployment claims coming in a little light. Nice. Less people filing unemployment this week. Yeah, riding on the Trump bump, I guess. And we have this event coming up at 3 p.m. If we see some volatility in the markets. There you go. There you go. Right there. Powell speaking at 3 p.m. And it looks like he's going to do some sort of panel discussion. Audience questions expected. That's interesting. And then tomorrow we have core retail sales, Empire State Manufacturing. Those are usually fun. See how we're going right into the winter shopping season? Winter holiday shopping season. It's the biggest period of the month. It's the biggest holiday shopping season, and interestingly enough, You know what the number two? Anybody tell me what the number two holiday in the United States for shopping is? Put it in the chat. Let's see if anybody can guess. What's the number two? You know, winter holidays, so none of the winter holidays count. What's the number two holiday? You know, holiday is a loose term here. What's the number two holiday for spending? Let's see. Halloween, it's on down the list a little bit. Valentine's Day, on down the list. Easter, on down the list. Valentine's Day, on down the list. No. Ah, Gary got it. Mother's Day. Mother's Day is number two in the United States. Mother's Day. Mother's Day. Isn't that interesting? Winter holidays and Mother's Day. Back to school. Back to school actually beats the winter holidays, but it doesn't affect all Americans. All right, so it's a segmented group, and it's interesting. But Prime Day, it's Prime Day. Anyway, Prime Day's gone. They've actually got like, I guess, 4 Prime Days now a year, something like that. You know, they do 2-day sales, so it's getting interesting. Soon it'll just be Prime Day all year, I guess. So we've got core retail sales coming up tomorrow. We'll see what happens. I just think that's interesting, like the the holiday spending. And Father's Day was way on down the list. 4th of July was actually up near the top. You believe that? 4th of July. Nobody even said that one. 4th of July was up right up there in the top, above Easter. 4th of July was actually above Halloween. Interesting. I thought it was interesting. We don't even usually think about 4th of July being a big spender, but I guess all the fireworks and the decorations and the meats. You got to buy the meats, right? The grilling out, all that, the cookouts, all the fun stuff. I know that's probably 4th of July is probably my favorite holiday. So, and Father's Day was right in the middle, actually, right down around. It's funny enough, Father's Day was like right, almost even with Valentine's Day. Fireworks and beer. That's right. Wrong number. I enjoy 4th of July, and we usually have a big cookout, and it's kind of like a back-to-back thing because we have my birthday, and then 4th of July is like a week after my birthday, so we usually have this big back-to-back cookout thing. A lot of fun. Anyway, I digress. Anyway, let's talk about the markets, shall we? So we've already done the disclaimer. And look at that one, Kava taking it right back yesterday. Ouch. Popped on earnings and took it right back. Ouch, ouch, ouch. S&P. I guess we're going to have to dive down to... so check it out right here. Look, even though we're in this like corrective stance, and even though we had this giant run the last week after the election kind of solidified, this hasn't topped out. This is stocks above their 20-day right here. So even though we've been popping, the participation is only 60%. That's curious, right? We were down here. Look, back here. We were down here at 30%. Now we're up to 60. Usually we top out in the 80 to 90 area up here if we're going to do a bigger correction. So this seems to be some kind of just the market taking it easy, but we do have the thing to look at here. We do have lower highs coming across here. What is this telling us? Don't think we've maxed this out yet. We did get pretty high here in August before we did that big down. Came up, lower high, double top. Didn't make a lower low, so we're doing a squeeze situation here. This is not a chart that trends. It's just a giant market oscillator. All right, we oscillate from the top to the bottom. Taking it off log mode makes it look better. It's just a giant market oscillator. But this is the most sensitive one. This is stocks above their 20-day, and we're just at 60%. 60% of 500 stocks above their 20-day. Curious. Looking at the 50-day, It's 60%. Looking at the 200-day, we're at 70%. And we're just hanging right in the middle of the zone we've been in for a year. It's very interesting here. I feel like this is very interesting. We haven't really pushed this to the limits and haven't really broken down to charge it back up at all. So last time when people talk about the market looking a lot like 2021, we haven't really pushed it to the max yet. We haven't really maxed out the credit card. Now, it does look a lot like this over here. And this is what's kind of got me a little bit concerned. I mean, look right over here. See how we churned it into 2016, 2017, 2018. And then we ran it to the bottom. That was the rates freak out. Then we ran it back up to the top. And then this is when look at this right here. Look, this is how we ran into, this was rising rates and this freak out, and they started cutting rates. We didn't run to the bottom yet on stocks above their 200-day. If you go over here and look, DGS2 right here, look. This is what I'm talking about right in here. Yeah, it was October. They actually started cutting rates right there in July 2019. Come back over here. So we had this freak out, and then it was July when they cut rates. See this right here? Right in here. We kind of did this as we cut rates. And then, uh-oh. We got the rate cuts here. We're talking about right here. Cut rates. What might this, COVID's not happening yet, but the big freak out in the S&P was in the charts before COVID happened. That's a mind bender for a lot of people. So history doesn't repeat, but we do echo the same sort of things, same sort of reactions, same sort of. Now, I don't have DGS2 all the way back 100 years. Can't look at what happened in the 20s. Oh well. All right, the Fed didn't exist back then, so Federal Reserve only kind of been around since back here. Modern trading, every time the orange line has gotten above the blue. Now, what's the blue? Blue is DGS2, Delta Golf Sierra 2. That's 2-year constant maturity rate right there. How do you find that? Go to tradingview.com. Put me on those slides so you can see. Tradingview.com. Type in Delta Golf Sierra 2 up here. Push this button. After you've got the chart up, push this button right here. Type FED, FUNDS right there. Adds the orange line to the chart. That's the Fed funds rate on top of the constant maturity rate. So remember, there's significant events I remember. This is basically my trading career is on the screen right here. All right. I remember this one. I remember this one. I remember this one. Especially that one right there. That's where I made my big money for the first time. My biggest money. And here we are in this one with a result yet to come. Now, I kind of held that we may see this DGS2 ramp off and the Fed has to chase it higher and lead to a bigger freakout in the market. Could happen. Other events have been shaping up in the last couple of days. Anybody remember me talking about if Trump wins, they implement Doge? I put this out as a scenario, right? Like they cut $2 trillion out of the budget and we freak out. Anybody remember me talking about that weeks ago? It's all coming together. Now, maybe I'm just looking at the wrong stuff, but I don't see anybody talking about how that's going to be a bad thing for the market. I think it's going to be a bad thing for the market. We could see this happen as fast as, get started in Q1, Q2, 2025. Trump takes over late January. Elon and Vivek go into action, start cutting stuff. That spending very quickly going to get cut out of budgets. Now think about it. There's probably more of the economy than you think does business with the U.S. government. All right, we're not talking this chart. We're talking this chart over here. What about this chart dropping off? What if we top this baby out here in the next couple weeks and then Q1, Q2 next year? Those may be the unintended consequences. So that's things to prepare for. S&P 500. S&P 500. Looky. So this was interesting, right? We didn't quite flush down to the lower target. This has just been chop is what this has been. Yesterday we failed to break down, failed to break out. But bigger picture, that was just sideways churn. And this looks set to go down lower at the moment. So the things I'm watching for, a break above this high would probably convince me we're done doing whatever nasty correction we're doing. But this looks set to go lower at this point. These targets may not be the targets at the moment. That looks like first move down. This looks like a choppy sideways. This looks like a 1, 2, potentially 3, 4, 5. Right down in this zone. And maybe as deep as the 1618 down here. I think we're gonna get another flush. Probably. Let's do this. 1, 2. Oh yeah, 3 probably gonna come right down in here. And 5 down here. So this is probably some way, somehow, we're probably going to do this. Bounce back up in that vicinity. And then one more down. Just to verify the move down. That one, that one, that one. Oh, yeah. Oh, yeah. That's kind of how I think this may unfold in the next 2 days. That's what it looks like. Is it a guarantee? No. Nothing's ever guaranteed. This is the most likely looking path at the moment for the S&P. Right down like that. Hate to break it to you if you thought we were going to be bullish today. We're kind of in this correction, and that's what it looks like it's going to do. Now, NASDAQ over here, much less clear. That is gnarly. And having a rough time trying to figure that one out. Looks like a 3 down, 3 up. And possibly the start. Yeah, it came up right to the 618. Possibly a start to a third move down. Very unclear at the moment. First move down, retrace. that would put us somewhere right down in here. Russell, just even less clear. We're down to that 1 hour roadmap line. Not sure we can hold it. May need to visit the 4 hour on Russell. The daily, of course, way on down here. And as we've seen in the past, we've seen large flush outs on Russell. Yeah, Russell, I don't know the Russell NDFI. NASDAQ has a stocks with a 50-day. It's just churning too. Oil, look at that. That's pretty nice. But unfortunately, that means we're probably going to do more of this and not just flush out and get a clear path going higher. So that's not happening at the moment as long as we hold this. So more churn in store for oil. Probably heading on this little trajectory over here for now until we can break out above the resistance or break down and flush it out. This right now, with the way this has happened, I prefer this. That would kind of confirm that we're done doing corrective crap, overlappy corrective crap. That would kind of confirm it. But you know, never has to do anything I want it to do. Never, never, never. Maybe it's a big head and shoulders. I don't know. You tell me. We're rejecting at the moment. A rejection could possibly make a move like this. That would put it up to the top right there. We'll see what happens. We possibly could rally back up to 80, make a little higher high, and then what would be my kind of indication? Probably a break back above this level right here. I think we're just going to churn more people on oil. Like I just don't. The people like the CEO for Occidental coming out and saying that Trump is going to be very bullish for oil, but the charts aren't showing that at the moment. Although this did, look at that. It did touch right there. Look. See a little touch the target. Even though it was doubting. Got lucky again on that one. I warned for a long time that one was going lower too. We could be done on the downside. This down here is a very real possibility though. GC. Oh, look at that. We're starting to get that hammer. Nice tail. If this some way, somehow turns into a green candle today with that nice long tail, that might be the bottom, possibly. It might. This is starting to look on the smaller time frames that I have up in the other room. And we have to go up a little bit more to draw this properly. That move. Look where we got to. First move down. Not the clearest, but nice first move down. Had kind of a five wave-ish structure. Very quick little retrace right here. And that move down right there. Those are the three I see in there in this correction. That bounced right in the zone for a reversal to show up. So what am I watching right now on gold is this right here. For now, we break back above this consolidation action right there. Probably back above 2620. Can kick off the bigger rally up there to 2900. That's a $300 move in gold. That'd be pretty dang spicy. Pretty dang spicy. So, kind of watching that. And this one right here. Silver. Lucky, lucky, lucky. What we did overnight. Oh, yeah. Love it. I'm probably going to put some spreads on right down here. Probably at 29. I don't know, 29, maybe 28 or 27, 27, 29. $200, 2-point risk, which points on silver are like $5,000. So that'd be a $10,000 risk. It'd probably be a credit spread. Probably sell that one, sell the 29, buy the 27. How far out? Probably February. Maybe January. January, February, somewhere out here. Somewhere out here. Why? Because I think this is going to pop off. That's a classic setup for a bounce. Where do I know if I'm wrong? When we get below 29. So, kind of. This is what SLV is based on. Now, this is the underlying for SLV. And we didn't, since we don't have the overnight action on the chart, didn't touch the roadmap line, but very similar price action there. Prices are not quite divided by 10. It's like divide by 10 minus 2. I mean, not divide by 10, just minus 2. Minus 3, maybe minus 2, minus 3. That's the cost of running SLV over the long haul. They were probably closer way back when. And futures have a little bit of a... So you can easily do this with this right here. You just go SI1 minus SLV. Or the other way around. There's your difference between them. Turning right around 274. And used to be lower, and as we go in time, the difference between the two gets more and more. That's because of the costs of managing SLV versus the futures. How do you know the difference? There you go, right there. That's a live chart of the difference between silver futures and SLV. Yeah, you can do the same for gold too. If you've never seen this before, check this out. GC1 exclamation point minus GLD. Oh, I'm gonna have to multiply GLD times 10. There we go. About a $200 difference. And you see it's ramping up over time too. The cost of GLD, cost of maintaining the gold position, ramping up over time. Used to be closer to like 50, 60 bucks. Now it's closer to 200 bucks. Kind of took an accelerated path here since 2020. Back when it was established, it was pretty much bang on. Now we're starting to ramp up. They'll probably do an adjustment at some time in the future, but there you go. Bitcoin still churning off that pop. We hit some upside resistance, and we kind of hanging here. Kind of been hanging here. Look at the all-time history chart. Just hanging at that resistance. interesting that that was the 1618 extension of this pullback from March through August. We're getting near an inflection point. Say use the correct whatever you call it. That's a 272 off that first two bumps there. Now, is that the 1, 2, and is this the 3, or is this the 3 of this, or is this the 3 of that? Now, this could be a nested 1, 2, 1, 2, 1, 2, and this be the 3, and we get a 4, 5, 4, 5, 4, 5. And that'd be the wave 1 of whatever we get. So we could, and I know that was probably confusing, but this would be a 1, 2, this would be a 1, 2, and this would be a 1, 2. So this would be the 3. We got a 4, 5, 4, 5, 4, 5, 5 way up there. That's why you get this. You see how we started out with a bunch of chop, and then you'll get a bunch of chop as we get near the top. All right. That's what I see happening. Michael C., I know you've been trying to figure this out, but it's kind of what I think where we are right now off of this low. That low being the most important one right there. All right. There you go. Yeah, except the thing is, Buffett said he's not buying anything. I mean, he pretty clearly said he's not going to buy anything. He sees no opportunities. So maybe he cuts a side deal in the background. Maybe he does nothing. And be careful. This one right here, Ethereum, turn down at the 618 right there. May need another retrace before we can pop through. If we break down below the roadmap line, and we may come all the way down here. If we break down, watch out for a bigger flush, even with the rest of crypto popping off. So support right in here. Hopefully we can turn it and burn it. If we don't, watch out for the bigger flush, even with Bitcoin possibly going on up, continuing all-time highs. They're on different paths. Dollar, look at that. Possibly topping out here. We tagged. I can't even believe it. We tagged that right there. Look at that. Right there. We tagged it. Tagged it right there. It could go on up to that 107.46, but that could be the top, and we flush this baby hard. That could cause gold to pop, silver to pop, and who knows what Bitcoin's going to do. That pullback could, here, for those of you who think the dollar pops, stock market drops, look at this rip. Look at that rip. That started before the election, right? This is not an election rip. This started before the election right here. That was a pretty historic move in the dollar, actually. That big, that fast. Probably one of the. I go back in the chart. I don't find hardly any moves that big, that fast. Now, I did do a pretty fast clip right there. Went from right here up to there, but it took a little longer. Took a little longer. You see a little slower on that prior one right there. We went faster this time. It's corrective type action. Watch for the next flush on the dollar. You could say it's not going to happen. They're sucking everybody in bullish on the dollar. NKD just churning. This is a global liquidity indicator, and we're just stuck in a further box here. We can break it on out. I think we're going higher, but just churning sideways. All right, I go to the pre-market, pull everything I can find. $2 or more up, put it on the gainers list. $2 or more down, put it on the decliners list using Market Chameleon. And let's go through it and look for opportunities. ASML stuck in the reversal zone down here. Took longer to get there than I thought. Possibly this could be done. It's going to take really shaping up a reversal in here for me to be convinced we're done. I'm not sure I'm going to trade this one again for a while. This chart just unclear to me at this point. I'm looking for the best of the best stuff. That's not the best of the best stuff, even though there's huge opportunity, because if this rallies on up to the new high, that's a lot of move right there. That's a lot of move. I'm talking about a 76% upside. MSTR just churning at another fib level. Still think we're set to extend this baby up like a ridiculous amount. Pretty ridiculous amount. There's opportunity to add some MSTX if you want that kind of extreme volatility exposure. MSTU. MSTX, MSTU. Opportunity for those right there. TLN. Talon. See, Oxy sitting there at the getting hammered, but this one's sitting here at all-time high. Watch for that to retrace. It's probably going to do it. They don't go up forever. Last time it hit the roadmap line was back here. Watch for that one too. Retrace, find supports, and bounce. KLAC. Ooh, almost to the target zone on the downside. That could be done. That first move, second move, third move. Possible done. Possible. I think it needs a little lower. Disney. Oh, man, nice pop. I drew this on here, gosh, back in August. Up here's the target. Probably going cruising right up here. Anybody got a piece of this? I did not. Like, I was intending to buy when we got above the roadmap line, but I just never looked at it again. It's going to be a beautiful trade. When we get there, I don't know. We'll see what happens. If we get on up past 172, it turns bullish and we can go on up higher, make new highs, new all-time highs. But right now, not sure. MSTU, as I said, that probably going to go higher with MSTR. Coin got whacked after it hit the target. Look at that. We found the resistance. Retracing, probably. We are retesting the breakout. Like right there, we're retesting the breakouts before we go on up. This was drawn as a significant resistance because it's where we topped out back here in 2021. Is a significant resistance, and until we get to the top of it, it's going to be difficult. We could retrace all the way back to the roadmap line even. Like this, that'd be kind of sucky, but we could come all the way back to the roadmap line. All the way back down to the breakout above the highs. That went really quickly. We hit the targets. Crazy enough. Look, I mean, it's like I said, that was going to be an intermediate kind of point where we find some resistance, possibly turn down. That's why that arrow was sitting over there for months. Retrace. Now, can we do this? Can we find the support in here? Turn back higher. That's what to watch. Watch for finding support. Some of these prior highs. This zone right there. Maybe as low as this. How long could that take? You tell me. We could do, this could just be a back test that high right there, and which we're already there, and we could just rip off. So I'm not liquidating any exposure I have. BTCT, this is going to be an epic short when this fails and comes back down. Reverse split, reverse split. It's a dumpster fire of a chart right here. Probably coming back down. MSTX, that one going with MSTR. BWXT. Could MSTR be finished? Yeah. At any point, it could be done. It could just stop performing with Bitcoin. Is it likely? No. But it could. So make sure you know where you're wrong and where you're going to cut anything, any kind of exposure you have to that one. BWXT. That's kind of popped off. 2 extreme targets. Watch for retrace. Can it keep climbing? Sure, it can keep climbing, but just not the most likely. Not the most likely. I mean, we could climb on up to 168, 186. TPR. Tapestry. 59 upside resistance. BN. That almost fooled me. I almost said Barnes & Noble. It's Brookfield Corporation. Resistance at 59, 72 above that. This looks like it wants to get a retrace back, test the breakout level, maybe hit the roadmap line before we do the final move. That would be a classic kind of price action right there. SMLR popping up. 76 next upside resistance. NTES. Now, for those of you who watch me, you notice I use 2 different fib tools. Like you notice I use the 2-point tool, the fib retracement tool, and I use a 3-point tool, the trend-based fib extension tool here on TradingView. They're right here. These 2 tools right here. I use those quite a bit. And you may be like, well, how come like SMLR used a 3-point tool and other charts you're using a 2-point tool like this one? It just has to do with what phase of the move it's in. All right. I've been doing this thousands of charts, hundreds of charts a day, probably hundreds of thousands of charts over the last like 5 or 6 years. I've been doing this since I learned Elliott Wave back in the mid 2010s. And it's just one of those things. Like once you spend so much time doing it, you kind of get this feel for which way the pattern's going. All right. I use these tools differently for the different patterns. All right. This one is when we're in a trend. That's why it's called trend-based fib extension tool. When I see a trend cooking, reversal cooking, that's where the trend comes in. All right. This one, fib retracement. That's where I'm looking for reversals. If it didn't really click with you, the retracement tool also does extensions, though. That's where it gets kind of confusing. On the little reversals, we get little extensions. And then for the bigger term, bigger picture, trend-based fib extension, that's where these kind of come together. I get lots of questions about which tool should I be using? And it's like there's not a clear-cut answer, all right? It's very subjective. And a lot of times we kind of fail. Like this right here would have been the 2-point. We came up and we kept blasting on through, and now we're cruising. Like that one just keeps on going. And it's part of the bigger trend. Where might we go? That's where this starts coming into play. This low, this high, this low. We could be cruising on up here. This 110, possibly even up to 159 on Brookfield. All right. A lot of it has to do with time frame. A lot of you aren't thinking years out in the road for a trade like this. You'd be thinking just the next couple months. So I try to stick to the daily chart and just look at the next, what's the next short-term opportunity. Sometimes I pick up bigger picture opportunities and talk about them. But I try to stay in what we can pay attention to the next week or 2 or 3, or and a lot of these daily charts, the patterns last 3 to 5 months, so it's nice and slow and easy and swing trader-ish. That's kind of where I'm looking for. So SMLR, I already went through gold. So gold futures are just any other derivative of gold is just a derivative of the gold futures chart. So if you just have to use your adjustment to apply. So SMLR hitting its head right there. NTES, hunting for the low. This may extend down to that 618 level right there. Despite getting a little pop today, it looks like it still wants to rally down to the bottom. SCHW, Charles Schwab, hitting the extension right there off that bounce. Beautiful. Anybody take that? I did not. 85.93 will be the upside. I still think longer term, we're heading down. Be careful. Be careful, be careful, be careful. This move right here. We're in that 618.786 potential for a reversal here. Now, if we could break above this high, right back over here, there is the potential that we go on up to 107. Set an alert there. Lunar in the reversal point. Watch for that to turn down. Already done the extension. Probably need to retrace, refresh. Connell, like I said, that one's struggling. Funny enough, this is almost more clear on what's going on than the coin chart. This got into these prior highs, struggling to get through, retracing. Probably find some support right in here, maybe all the way down to the roadmap line. Then we'll go for the target. We see this a lot on charts like this. Like the leverage chart sometimes gives you clarity, but sometimes not. So that may be what we have to have happen on the leverage chart before we can get the target. AMAT. Just churning. Churning under the roadmap line. Sideways is my expectation. Logitech International, probably going to get a bigger retrace, maybe down as far as 60. Somewhere down here is where I expect us to go. Or I expect this to kind of suffer for a while. Cold was popping just a little bit. NG1 exclamation point. Natural gas struggling to try to break out. A lot of resistance right here. It was on a few day rip and then just kind of really stuck right there. If we can break out above these highs, I expect us to rally on up to 360 to $4 area right up here. There's the resistance right there. TSM, probably coming back to the roadmap line. PKX, hunting the bottom. We may be able to hold that right there, but this is a very unclear chart and looks like it may want to extend lower. QCOM, it's going to have to break out of this consolidation here in a meaningful, powerful way to convince me we're doing the bigger upside potential. GAMB, 3 up so far. Sloppy clicking. Fix all those. And $13, $14 area maybe. So decliners. Ibotta. This, to me, this falls in the same category as Groupon. Like, I'm not sure how they make money. This looks like a 5-wave down, a retrace, and this may go on down to 30. You're not even sure what Ibotta is. They have those commercials where the money's flying everywhere. You sign up for Ibotta and they buy things and they track it, and it's like basically they're giving you money to collect your information, what you buy and your spending habits. So they give you money back on what you buy and try to influence what you buy, and yeah, nice. Just churning here. Not sure that's reversing either. Found resistance where I thought we might, and we turned right back down. That looks like it's going to go lower low, probably somewhere down in this zone. Right in there. H row, back to the roadmap line will be what I expect. We turn down at the 1618. Right back down. Set up a bounce off the roadmap line, and we can see what happens on that one. NVCT. Holy moly, what a chart. That's Biotech Pharma, which is one of my do not trade list items. Possible for this to have bottomed, but it's also low price. Stuff under 10, equities under $10 don't always follow the patterns. And biotech pharma, anything the Food and Drug Administration is, doesn't follow the patterns. So that's 2 out of 4 things that don't always follow the patterns. The other 2 being leverage stuff and China stuff. Those are the 4 things that commonly don't follow the patterns. Real estate investment trusts tend to do their own thing, and IPOs tend to be corrective. So those are 2 other caveats. Another one is another weird one is SPACs. So I mean, there's a few other things that are on the list that are just weird, like SPACs and IPOs. But app coming up into potential resistance. Watch for the turn down. Tesla needs to churn this out a little bit. That was 350 was the target for my target for years. I talked about that probably for all of 22, 23, 24 so far, and we finally hit 350. After we, 22 when we did this down here, I was like 350, 350, 350. We hit 350, probably retrace it, maybe deeply. Maybe set up another 1-2. That was a 1-2 potential there. May need to do a deeper retrace. I know some of you are holding significant positions in Tesla. Maybe that's not what you want to see. We could come back down to this zone. Could come back and retest the breakout of the downtrend of highs. That could be what we do. I'd like to see it just hold the breakout level. Hold there and go higher. That's why that big orange zone is there. Retest that, go higher again. That's what I'd like to see. We did the perfect extension there. Pretty perfect. The levels we could come back to right down here. Not awesome. That'd be kind of a little bit below the daily roadmap line at this point, and who knows where it'll be out there. So I really want to see it hold this zone right here. I want to see it hold there, turn higher, go cruising on higher. But I'm cautious. Like if we start getting below that, not so good for long term going higher in the short term. I guess the short term going higher. Long term, we're probably going higher. Just how long is long term? Long term, different long term. So we may see this retrace at this point. SOWG, so good, is a nasty chart. What makes it nasty? Look at those gaps, and that just, it looks like just static almost. Giant down, just churning, no positive, like this is no positive signs of reversal here, and this just sideways, choppy, nasty chart. FLUT, target, watch for the retrace. HIMS, watch for the retrace. I got to targets. It's funny enough, they lost their ability to make GLP-1 drugs, launched up to the target. Now I'm going to retrace. ZK, probably coming on down. D, probably coming on down. I'm going to draw a target. I think we're coming back to there. SMCI. Oh, we are in the 10. Oh my gosh. We're back in the hundreds. 180, 63 before the split. I can't believe that worked as well as it has. I mean, May come all the way back down to 10, but we're in the tens, which is in the 100s. I remember in February when I said that was coming down. It took way longer than I thought it would. I thought we were flush faster than that, but lesson in time frame, I guess. Should have gone longer. Right there it is. That one's done. Limited downside at this point. You can keep rocking and rolling down, but be careful. FUTU. Watch for the retrace on down to the roadmap line. Bonus trade for the day, UDR. Here's the high, here's the low. There's the activation. We're retracing a little bit today. Upside 48. Here's the statistics right here. Upside target official 48.49. Stop below 40.04. Profit potential $3 on the upside. 39 trades since 1980. That's pretty strong. Usually lasts about 61 days. That's 61 trading days. Profit vector a little light. It's I didn't have much, there weren't many choices on the list today. This was the best of the list. 79% win rates historically. 61 days is the average. Can it take twice the average? Yep. Can it take 3 times the average? Yep. Take 4 times the average? Yep. 5 times the average? Yep. So the average is just an average. It can take longer. It can take shorter. Here's the entry. 61 days. Trading days is right there. Be 91 calendar days. Why is the calendar days different than the trading days? Because weekends. There are no candles made on the weekends. So calendar days takes longer than trading days. And 60 trading days in 3 months, basically. All right. Any questions? Let me know in the chat. There's the official, look, this is an official, the algorithm actually says, hey, that's an entry right there. So there you go. If you take it, if you do it, let me know. Good luck to you. If you do, there's the upside target right up in there. Edit. What's today, the 14th? Target. 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 Save. I don't always remember to do that, but there you go. Bonus trade target from November 14th. All right. Bias for the day. For those of you still here. So, kind of impressed. More and more people hanging out to the end. So bias for the day, back to that ES chart right there. All the way down to the 15-minute. Oh, looky. Already breaking down. Probably doing that thing I said. That's what I expect. That's if we can. So if this accelerates, this could happen faster than I expect. If that goes fast, potential reversal faster. But this could last out until tomorrow. Now remember, Jerome Powell speaking this afternoon. He could cause this flush out here. So that's kind of what I'm expecting for the day. I'll be back again tomorrow. Same bad time, same bad channel, 9:15 in the morning. Have a great day, everybody. Be careful out there. The account you save may be your own. Remember, it's not being wrong that costs you a ton of money. It's staying wrong and doubling down and doing all the stupid things. So don't do stupid things in the market. Don't stay wrong in the market. When the market tells you you're wrong, just GTFO. Get out. Have a great day, everybody.